Look, if you are still a big bad bear, we've got news for you because there are 3 beaten down sectors to own in 2024. Hey, I'm Luke Downey. I am reviewing our latest big money insights at mapsignals.com. Make sure to check it out. But let's go ahead and get into some awesome sectors for 2024. So what happened in November? Well, we know that markets were oversold and they had a tremendous, huge rally. The S&P 500 actually surged 8.9%. As I like to say, it stunned the crowd. But that is only half the story, because when you dive below the surface of the market, there's a lot more going on than what meets the eye. So let's first go over the biggest macro move that we have seen in a long while, and that is the decline in interest rates. And a really awesome way to see that is looking at the 10-year yield. So this peaked at 4.99%. This is on October 19th, and then it basically free fell 88 basis points in 6 weeks, dropping to 4.11%. So anytime you have this type of magnitude where interest rates fall this hard, it's going to have shocks elsewhere, namely in equities. And so if we look at the peak in yields, which happened on October 19th, look at the performance of small caps versus the S&P 500. So since October 19th, right, the yield peak, small caps are up 8.7%, easily beating the 6.6% return in the S&P 500. But check this out, on a 2-week return, small caps are up almost 3%. On a 1-week return, small caps again are up 3%, and you can see the S&P has not really gone anywhere. What is causing this big surge, this new abundant life in small caps? It's really 3 major oversold groups, and you guys probably know these. So since those October 19th lows, discretionary stocks, we're looking at the small cap 600 sector performance. This is all of them. Wow, look at energy down almost 15%, but you've got discretionary up 15.37%, financials up 12.64%, and real estate up 12.61%. You'd be like, why on earth are these names doing so well? Well, discretionary, think about it. Interest rates go down, who's going to benefit? Small companies, the consumer, right? They can spend more money. So let's buy those companies, bid them up. Financials, think about as yields collapse, that is going to help banks. That's going to help mortgage origination. That's going to help the deal pipe. All kinds of stuff is levered to financials whenever rates come down. And then, of course, real estate. Everybody wants to talk about how unaffordable real estate is. Well, when rates come down, they start to juice. So why am I telling you this now, right? It's after the fact, right? You start seeing some comments on YouTube, people talking about, don't tell me what's happened now. Well, just remember what we said back in October. Late October, we were telling you the big money index, it was sub 19, a super rare bullish event. And here I've pulled all the returns. We told you to expect a double-digit return in 1 month. And lo and behold, look at what we did get. Of those 6 instances where the BMI was below 19, they were up on average around 9%. So sorry we didn't get that 10% threshold that we were hoping for, but man, when you study data, it tells you that that's when you want to be leaning in, when stocks are extremely oversold. And get this, when the BMI is below 19, we beat the bull drum. 100% of the time, equities are up a year later. This is looking at 2016 to present. You take this sucker all the way back to 1990, it's still 100% with 150 plus instances. Insane. This is the power of following the big money. And whenever we've got interest rates are set to decline really hard, right? The Fed is set to cut interest rates in 2024. These beaten down areas that people hated, they love to just kick them down, they are going to be booming next year, and it's already starting right now. You guys have a great one. Send us some comments. Make sure to like and subscribe. And remember, follow the data. That's how you're going to win in the market.